Hey, happy Friday, everyone. Good morning. This is Forex Brizio. It's 11:40 a.m. on Friday, June 16th. Hope everybody's doing well. And just wanted to make a video today. All right, guys. Sorry for that awkward pause there. I just noticed something I had to change on the chart before we got started. So, hope everybody's doing well and wrapping up a good week. It is Friday here. We're just before the London close, so being that it's Friday and it's summer months and all that and London close, I do expect market volume to dry up here, so may not be great afternoon here for the trades, but I did want to just point out, based on the video I made yesterday on correlations between the dollar following, dollar index and looking at stock futures and euro dollar, for instance. And I just wanted to point that out. So this is what you're looking at again. And if you want to know kind of the details of this, watch the video that I recorded yesterday, and it'll kind of give you a little bit of the highlight. But this is TradingView, and what I have on the chart here, this is the E-mini S&P futures. And I just had to change this to the September contract because the June contract expired today. So the price wasn't moving. So I had to just change this to September. So now it's showing the right pricing. This is the euro dollar, and then this is the dollar index. And we're just looking at a 15-minute chart here. So down here, the dollar index, this box basically represents the New York session, basically the Forex session, 8 a.m. to 5 p.m. And then this area in here, in between these two boxes, is the overnight session. And you can see on the U.S. dollar, this was the overnight session after the big drop yesterday. Everything, typically very quiet during the overnight session. And then we pushed out of the the overnight session low, came back, retested, and then pushed out again. Now, right now, we're sitting right back at these levels. And so if we look over here at the euro, you can see that this was the overnight on the euro, and you can see we've broken down below here. And then on the S&P, at the same time that this dollar was starting to move up right here, you can see that at that time the euro broke lower, and we did have this little push up right here. So like I was talking about inverse correlations, where if the dollar index goes up, this should come down, right? Because in theory, strength in the dollar should cause weakness in the S&P. But you can see for a while that correlation wasn't holding. They were both moving up. But this was a false move up. This is basically a liquidity grab. And we're looking at a 15-minute chart here. But this is a liquidity grab where they, pushed prices up and sucked in people to go long on a breakout over yesterday's highs. And then we started pushing down. Now we're back down inside the range. We're not really doing much. And some of this, again, is, I think, because it's Friday. So we'll see what happens. The euro also during that, actually the euro during that time started its down move. So this is what I'm saying, that this is great little confirmation here, because you got this push down, you got the dollar rallying, the euro pushing down. But if you were just looking at the ES, you'd think, oh, this thing's going to keep going up from yesterday. But this really was a false break higher, okay? Because this move right here was the basically the candle just before the U.S. Open in the futures market. This was at 9:15. This market opens at 9:30 New York time. So just before that, they pushed it up, swept some liquidity, and then they sold it back down. So, and you wouldn't have really known that without kind of looking at your dollar index to see that was pushing higher and that the euro was pushing lower, kind of reinforcing the dollar's strength coming into the market. And so you can see now on the dollar, it has broken above the Asian range, not very aggressively, I will admit that. You can see how small this New York box is today. And again, I think a lot of that's because it's Friday, and the euro is kind of broken below its range. But again, it's not really doing much. And we probably, I'm thinking we'll see this drift lower and the dollar drift higher on the day. But I don't expect any big impulsive moves. But I did want to point out, again, these correlations here. So I am currently short on this is the the ES. This is the S&P on my live account. You can see I am short right here, and I'm in a very small profit, but you can see it's not really doing much. There is a support zone, basically like right through this area. You probably actually can use a rectangle here instead of just a line, just to catch this low. So we are kind of still in this support zone, so price is obviously struggling to get through here. And again, because of the volume today, it's a little low, but he is in a little bit of profit, so I'm just going to hold these. I won't hold them over the weekend. I will close them before the day is over, but we'll see how they go. And then in the Forex market, I'm also short in the euro due to what we saw here. I basically took the short, right at this the break of this structure here. There was a liquidity sweep. You can clearly see up here on this 15-minute chart where we came back up, swept the liquidity, and then have sold down. This really, close of this candle should have been where I got in, but I waited a little bit and got in right there. As you can see, the green line. And I do have a take profit set right down here. I'm not sure if I'll let this run through today, past today. But we'll see. I don't think it's going to get here today either way, unless all of a sudden we have a big push down. Because again, just with the volume, seems to be very low today. But I just did want to point out that that situation, just based on this analysis, and kind of using all three of these markets here to kind of paint a picture about what price might do, at least on the day. And again, you can do this on any time frame. This is a 15-minute chart, so this is good for like a day trading type setup. But you could go out to the 1 hour or the 4 hour and kind of do the same thing if you want to take the bigger view of things. But like I said, if you're a day trader, this is a nice little way that you can gauge what the market is going to do based on having some confluence factors on the dollar index and looking at the euro dollar as an example. You could look at any dollar pair. I just use the euro dollar just because it's so heavily traded. I want something that's got some volume in it, but you don't necessarily have to use the dollar. You could use the pound dollar. You could use the Aussie dollar, the Kiwi dollar. I probably would stay away from dollar yen just because the yen is can really mess things up. And I don't trade dollar Swiss because of the Swiss. So I just think the euro dollar is probably the best one just because, again, the amount of volume that trades on this pair, I think it's a pretty stable one to use. Okay? But, we don't have a lot of volatility today, which is kind of the downside of this. If I add the VIX, I'm going to just throw the VIX in here. The VIX is basically a volatility for the S&P. And you can see, here's the VIX. I'm not going to leave this on my chart, but you can see how little volatility there is today. You can see this thing just falling really low. And you can see yesterday when the S&P was going up and the dollar, you can see the volatility rising. So the VIX is potentially another one you could add to your chart, but it's pretty self-fulfilling. You can just tell by the range that it's not great. But this is probably more indicative of just, mid-session Friday. And there's just nothing really to push this either way. So the volatility is falling off. So unless this changes and this thing turns back up this afternoon, then I would expect that we'll see price quiet down. But it doesn't matter because still the bigger point here, I'm going to take this off. The bigger point here, again, is just that the dollar had gained strength, and we saw a false break on the S&P, which you wouldn't have known if you hadn't looked at the dollar index rising during that time and the euro falling. You may have gotten sucked into taking a long position here when clearly that was not in the cards. We broke out above yesterday's high, so this candle sucked in people to take a long position, only to have it come right back down. And probably take them out because they probably had their stops down in this area here or below this bullish candle. And especially for a day trader, they probably stop them out or at least probably has them in drawdown right now. And so that's what they do. So normally I think if we had a higher volume trading day, this thing would be going down quite a bit, which would be great. But like I said, you have to kind of know that, going in, that volume is going to be fairly light on a Friday, especially heading into the afternoon, and you just might not get a lot of price action as we saw on the VIX. So, but anyways, guys, just want to point that out as an example. And like I said, if I covered this in a little bit more theory in detail yesterday, so you can watch that video I posted yesterday. But I'll leave it there, and I hope everybody has a great weekend, and hopefully you'll come back next week with some more of these examples and be able to see some of these play out with some more volatility. All right, so I hope it was helpful, guys. Please smash that like button. Helps with the YouTube algorithm. And if you're just finding the channel, hit that subscribe button down in the lower right corner and ring that bell below that just so you get notified when I post new content. And I hope you guys have a fantastic weekend, and we'll talk to you all soon.